Hey everyone, hope you're all doing really well. Look, I just wanted to run through, I didn't make a video yesterday. I wasn't really available at the charts and didn't really take any trades. So I just wanted to run through potentially what trades you could have taken on gold. But before I do that, I always run through the ICC strategy before we get into the example. So if you are familiar with the ICC strategy, please feel free to skip this section and I'll just run through the ICC strategy for those that are new. Okay, so ICC, it stands for indication, correction, and continuation. It is a trend following strategy. So the market either needs to be creating higher highs and higher lows, which is an uptrend, or the market needs to be creating lower lows and lower highs for it to be considered a downtrend. Those are the characteristics of both an uptrend and a downtrend. So if we look at an uptrend first, we start with a low, a high. Price then creates a higher low. It's called a higher low because it's higher than the previous low. Then price breaks above this high, creating a higher high. It's breaking above this higher high and it's called a higher high because it's higher than the previous high. At this point in time, we're drawing our level of interest at this previous level here. So we've now, at this point in time, got our first phase, which is the indication phase. So that's first phase of ICC. Second phase now is price then comes back below the level of interest, and this is the second phase, which is the correction phase. Price again creates another higher low because it's higher than the previous low. At this point in time, I forgot to mention, when we're looking at this, when we're drawing we're looking for the ICC, we're marking our charts up on the 4 hour and the 1 hour time frame. That's crucial. I'm sorry I didn't mention that before. So marking up your charts on the 4 hour chart, we've created the indication. Now we've got the correction phase, which is the second phase. Now we scale down to the 15-minute and the 5-minute time frames to find the characteristics that support the overall trend. And the example that we're running through is we're looking for characteristics of an uptrend, but now on a 15-minute and a 5-minute time frame. So from this point onwards, we then are looking for an entry above our level of interest, which is this previous high here. And we're looking for characteristics that support the overall trend. So that means we're then, if you scale to a 5-minute or 15-minute time frame, you're sort of looking for higher highs and higher lows, or something that sort of resembles that. If you're not getting that, and price is actually creating lower lows and lower highs, then the trade's not really going to be valid for a buyer trade. That's something to consider. So then we take an entry here. Once we are getting the characteristics of an uptrend on the smaller time frame, and we looked for the overall target at the previous higher high here. Now for me personally, I take profits at the halfway point and also at that higher high. So I'm sort of spreading the risk a little bit. So because I know sometimes price may get to the halfway point and then just come back down. So I am cautious and I generally take half my position off at the halfway point and then my full position off at that previous higher high. So that's an uptrend. A downtrend is the reverse, essentially. So we start with a high in the market, a low in the market. Price then creates a lower high. Price then creates a lower low, which is the first phase of our ICC strategy, which is the indication phase. So price creates that indication. At this point in time, we're drawing a level of interest at that previous low. From this point onwards, we're then waiting for price to create the second phase, which is the correction phase. It's again creating a lower high, indicating that we are in a downtrend. So once we get that correction phase above our level of interest, we then need to scale down again, just like the uptrend. We need to scale down to the 15-minute and 5-minute time frames to find the characteristics that support the overall trend. And in this case, we're running through the example of a downtrend. So scaling into the 5-minute time frame, 5 or 15-minute time frame, if price then breaks below this level with characteristics of a downtrend on on those time frames, we look for an entry. Same thing again, overall targets are at the previous lower low. I personally, again, same with the uptrend, I take my profits at the halfway point and that lower low point just to sort of, reduce my risk a little bit. I think as time goes on, I probably will set my targets just to the lower low and not the halfway point as I develop further confidence. But at this stage, this works for me, and I'm seeing some pretty good results from it so far. So I'm going to keep doing that. So if we run through yesterday, so I'm not sure if you guys, I'll change this to a lighter color so you guys can see. So if we're looking at this, this is the 4-hour time frame. So when we're looking at the charts, we're looking specifically for the swing points. So if you come to a chart, you want to analyze, look at the most recent high and look at the most recent low, and then what's happened in between. That's really important to do that. And then to analyze, okay, at this point in time, are we in a downtrend? Or at this point in time, are we in an uptrend? And it can get a little bit confusing sometimes, and that's why you need to really review both the higher time frames, so the 4-hour and the 1-hour time frame. So if we're looking at yesterday in particular, so this is this section here, so from 6 p.m. through to 2 p.m. around that time, that's yesterday. So I would have come to the chart. I trade the London session, which is 3 a.m. UTC -5. So I'm looking at this point in time. So we can see price has created lower lows and lower highs. Very obvious here. And then at this point in time, this was our previous lower low. So we can see there's a lower low here. We can see there's another lower low. Another lower. It's a lower high. So we've got a lower high here, a lower high here. We've also got another lower high right here. Okay. So we're looking, this is yesterday, this area here. So when price breaks above this level, that then signifies that we potentially could be in an uptrend. So I'm not really seeing too much here on the 4-hour. So what I'm going to do is I'm actually going to scale down to the 1-hour time frame. I can see that that's the previous lower low, so I'm going to mark that. So I know that if price generally gets above here, that we're potentially looking for buys. So I'm not sure if you've noticed potentially in my last video as well, I've thought that this drawing where you can see these upwards arrows sort of helps you gauge or gives you a bit of an understanding that we know that if price gets above this level, so I've sort of had this level of interest, and I know that once we've created an indication and price comes back, that coming back above this level that we've may have marked out, that price we're looking for buys at this level. So what does that sort of look like? It looks like this. So if we're looking for an uptrend, you can see that level there, those little upward arrows, that means that once price has created an indication and then it's had its correction below the level of interest, we know that this level with those arrows pointing above, it means that we're buying above that level. Again, if we get the characteristics that support the overall trend. So I hope that makes sense. So I've got the lower high marked here. You can mark your lower low there. I'll leave that there because I do want to show you that the trade that I did take on Monday, I took off way too early. I'll get into that once we get onto the smaller time frames. But let's look at the 60-minute for now. You can actually see there's the trade there. Anyway, so we're looking at yesterday in particular. So if we're coming to 3 a.m., 3 a.m.'s right here. So if we're tracking price, we know that this level is from the 4-hour time frame. Price did break above this level and come back down and correct. So what you could do is you could actually move your level of interest right here. And that might paint a bit more of a picture, because if we're looking at this, we can see price is creating higher highs and higher lows, isn't it? This is a low, this is a high, this is a higher low, this is a higher high, this is a higher low, this is a higher high. Price then comes back below this level only slightly. This is more of a break and retest strategy, which isn't quite the same as it's very similar to ICC, but it's not the same. And the big difference is, with a break and retest, price breaks up, comes back, tests this level, then breaks off. And this is, I would say, is more of a break and retest. If it was ICC, we want price to come back down below this level, not break previous lows, so come back down below further before breaking up. So we can see this is more of a break and retest, and you can still take these trades. They're totally valid. But for me, I'm very strict with what I do. And my preference at this point in time is that I only am going to take ICC strategy trades, and I'm not going to take break and retest trades. But if you feel like you are comfortable enough to do that and you're confident enough to do that, then by all means go for it. So if we're looking at this point in here, we've already created that indication. We've created the higher highs and higher lows. Here's the indication. This is the most recent. Higher high. Price creates that indication, comes back, corrects. So if we go to a 15-minute time frame, probably might need to get into a 5-minute time frame, we can see that this is very much a break and retest. So let's actually look at the 5-minute. I'll just remove these levels. And this is it right here. This is very much break and retest. So you can see price broke above, came back and tested, just wicked out. So we're only getting the wicks. We're not getting body closures down here. And price then eventually came back up and broke this level. So you very well could have, if you felt confident enough, you could have taken a buy entry here. But then again, your risk to reward probably would not have been enough there. So if you were putting your stop loss at this level here, targeting the previous highs, that's a risk to reward of 1.11, which isn't enough. We really want, at the very least, between a 2 and a 3 to 1. Ideally, perfectly, you want a 3 to 1 or more. So still not really a good setup. I wasn't really looking at the charts at this time, unfortunately. So and lucky for me, there was no trade. So that's okay. Now, if we look back at yesterday, not yesterday, the day before. So it was the Monday. I got into an opportunity here, right here, and I got out right here. I got out way too early. And this is one of those things where I need to practice actually letting hold my trades. I know some people have issues with holding their trades for too long. I'm the complete reverse. I don't hold my trades long enough. I need to hold my trades for much longer period of time, because realistically what I should have done, if we were to go to the 60-minute time frame, let's just have a look, just refresh this. What I really should have done was actually targeted the previous swing point here, which would have been right here. Make that just a bit thinner. But it's not the end of the world. I still made some money on it, so it's not bad at all. So go back to the 15-minute time frame. We're looking at this point here. My entry was here above this level. And I'll just quickly recap that. It was based on the 4-hour time frame. So we're focusing here. We can see that overall, this was a massive indication. Price came back below this level. It tested, came well within, so it wasn't a break and retest. It didn't really break its previous lows. So I was interested at 3 a.m. New York time. I was very interested, and the market for all day up until the London Open, the market was trending pretty much in a downtrend. And I know that when markets open, once they've been going in one trend for the longest period of time, when a market opens and there's volume in the market, more likely than not, price will do some sort of reversal. Now, that's not gospel. That's not, a definite. It's just from, a lot of experience of me looking at charts, trading previous strategies, and noticing that, if price has been coming down for the longest period of time, and then when we get a volume session open, like the London session, or it could be the New York session, but in this instance, it is the London session, price reversed here. And the reason why I got in this trade specifically, well, we know that this is the 4-hour overall time frame that I had previously marked out. I got in here because I started seeing characteristics of an uptrend, very minorly, if that makes sense. So price created a low. It broke this lower high here ever so slightly. And then right on 3 a.m. I saw volume here, and it shot up really quickly. So I thought, okay, this is my opportunity. Although it wasn't absolute textbook, I know that from the higher time frames and above this level here, I've got a higher percentage of the trade working out in my favor, because I'm using the overall higher time frame, and that's the most important aspect of doing this at this time. So I really should have, again, probably targeted the previous swing low here. My stop loss, I think I had below here. That would have been absolutely perfect, but I can't complain with profit at the end of the day. It's just something I'm going to have to learn and move on from. So if we're moving forward, let's just see what I'm sort of looking for. So London isn't open yet. So let's just sort of see what we've got potentially that could play out. So I can obviously see, if we're looking at the most recent market structure, I'll just delete this just so it's not confusing anyone. Looking at the most recent market structure, we can see that this was the last lower high, and we know that yesterday price broke above this level. So what I'd be doing is I'd be marking my level above here, because technically this is a low. This is a slight pullback, creating a higher low, and technically this is a higher high, and you'll see that on the 1 hour time frame. So this is technically it's an indication. So if we go to a 60-minute time frame, what sort of thing will I be looking for? Now this is a little bit confusing, because we can see that this is a high, this is a lower high. So this market structure is actually suggesting that potentially we might be going further down. However, if you look at this structure here, this is the low, this is the lower high, this is the lower low. You can see this massive wick here. So price came back below, rejected, and then pulled back up. I don't know what's going to happen here, guys. So I'm sort of probably going to keep out of this trade, or any potential trades, because it's not really clear. It doesn't really make sense. And my rule to myself, and I implore for you guys to take on as well, that if it doesn't make sense, then you shouldn't be trading it, because the last thing you want to do is force a trade and lose money because you did. And then inevitably what's happened is you haven't followed your strategy, and you'll feel way worse about everything, and I've done that too many times, and I know that it hurts too much that I'm not going to do it anymore. And some people can learn that lesson quickly, get burnt, move on, and sometimes it takes people a few times to get burnt, and that's perfectly fine. It's part of the process. Everyone learns differently, so just don't be too hard on yourself. Be positive. I think that's really important. You have to be kind to yourself and not be too hard on yourself, but also be strict. It's really important to be strict about your rules, because if you're not strict, if you're not disciplined, your P&L will show that. So that's all I really wanted to run through, guys. If you did have any questions at all, feel free to put them in the comments section. I'll do my best to try and answer them as best I possibly can. If you did like the video, please give it a thumbs up. And if you want to see more content like this, please do hit the subscribe button. I'm really, really appreciative for all that are watching and taking part and taking part of this journey that I'm on. At the end of the day, this was just a place where I could journey and document what I'm doing, and help people along the way. That was the entire point of it. So I really hope that you did get some value from this, and thank you so much for your time. I'll see you in the next one.